Good morning and welcome to Charting the Markets on Wednesday, the 30th of August. Stocks in Asia pushed higher for a third day as China's stimulus hopes continue to underpin bullish sentiment, while weaker US jobs data gave strength to the idea of a pause in the Fed's hiking efforts. And yesterday, an easing of US Treasury yields followed the weaker jobs data, basically helped to support risk appetite generally, especially ahead of today's ADP employment data and Friday's non-farm payrolls report. So let's begin by having a look at today's economic calendar because it is quite full. And at 1 p.m. we've got German preliminary CPI, that is to say inflation, for the month of August, which we expect to come in at 6% year on year, and to rise by 0.2% month on month. And then this is followed at 1:15 p.m. by this US ADP employment report, the jobs data out for August in the US, and we expect the openings to fall to 280,000 from 324,000 in the month of July. And at 1:30 p.m. we've got the second reading of, or the second estimate, I should say, of US GDP, and we expect growth to rise by an annualized 2.4% quarter over quarter, and versus 2% in the preliminary estimate when it was first published. And then at 3 p.m. we've got US pending home sales, and these are followed at 3:30 p.m. by the US EIA crude oil inventories. But let's begin by having a look at these bullish equity markets. As I said, Asia has risen for 3 straight consecutive sessions, and this has been tracked higher by the FTSE 100 earlier this morning. And as you can see here on the daily financial bet of the FTSE 100, we managed to break through the July to August downtrend line yesterday, and also to close above it, which is bullish for the market here in the short term. And it seems to indicate that we have not only bounced off this key support area I've been mentioning over the last few weeks, made up of the March and July lows between 7,228 and 0.4, but have also ended a 3-legged Elliott wave corrective move to the downside, and could now be heading back up again. And this view is basically, or will probably remain valid from a technical perspective, provided we stay above the last reaction low, that is to say the low in August. But since that is so close to the March low, we might as well take the March low as our reference points. Basically what I'm saying is, provided we stay above 7,204, I expect further upside to be seen now that we've broken through this downtrend, and that should then take us up towards the 10th of August high at 7,624, and also the red line here, the 200-day simple moving average at 7,640, and perhaps even all the way back up again towards the July high at 7,723, and also the mid-May high around 7,800. So further upside seems to be likely for the FTSE 100 in the days and weeks ahead, now that we've probably ended this corrective move to the downside. And interestingly enough, if you look at US markets, the story is quite similar here. You can see here, this is the Dow Jones Industrial Average. And as you can see on this chart, we have been trading in an uptrend since March of this year, since the US banking crisis. And you can see that we've had an up leg, downward correction, another up leg, sideways correction, another up leg, taking us to the July highs at 35,690, and then the downward correction. But this has bounced off the long-term uptrend and has done so above the red line, above the 200-day simple moving average at 33,769. And the fact that we have now risen yesterday and closed above last week's high gives me strength with regards to my bullish view, and seems to indicate that the corrective move that we've seen over the last few weeks lower has now ended, and that the long-term uptrend since March of this year is likely to continue. And the next upside target for the Dow Jones Industrial Average short term is around the 35,000 area. As you can see here, it acted as support at the beginning of August. And then once that's been broken through, we will be most likely heading back up again towards the July high at 35,690, and perhaps even towards the 36,000 area towards the end of this year. So So far, it looks as if technically we formed a bottom and that further upside is in store for us with regards to the Dow Jones Industrial Average. But what you want to see in case of reversals is this being confirmed by a lot of other markets. And we're seeing that all over European markets, the DAX, the CAC, etc., but also in the US. As you can see here, this is the NASDAQ 100 daily financial bet. And here we have also yesterday risen above last week's highs and closed above them, all of which is bullish. So for me, the corrective move we've seen again since July has probably ended. And we are now heading back up again towards that July high at 15,932 with regards to the NASDAQ 100 and this daily financial bet here. Now, short-term support, as you can see here in the overnight session, we're coming off ever so slightly, perhaps in anticipation of these ADP employment numbers, or perhaps Friday's non-farm payrolls number, which is obviously very important for the financial markets because together with the inflation data out in Europe and in the US and the growth data, the GDP data out in the US later on today, it will give us a good indication of what the Fed and other central banks are likely to do with regards to perhaps no longer hiking rates in the near future. So that will be interesting to see. Now, with regards to the NASDAQ 100, there is short-term support here around the orange line, the 55-day simply moving average at 15,220. But basically, provided we stay above the last reaction low, that's to say Friday's low, here at 14,713, further upside is likely to be seen with regards to the NASDAQ 100 as well. The US dollar, which last week hit a 2.5-month high, has started to come off. We will look at the impact of that on other currency pairs in a minute. But before we do so, I'd like to also briefly mention the euro, because the euro has been an underperformer of late. But against the British pound, it has actually managed to regain some of its recent losses over the last week or so. And you can see here, this is the low from the 23rd of August at 84.93. And now we have risen from there towards the 85.99, 86 area, and are trading back in the middle of the sideways trading range we've been in since June of this year. So basically on the upside, we've got the sort of 87 area, on the downside, the 85 area. And right now we're bang in the middle of that at 86, heading towards a long-term downtrend line taking us back to April of this year, which currently comes in around 86.30. And if we were to manage to break through there and also above the June high at 86.58, then we could be heading back up again towards the 87 area that we hit back in July. And above there, we've also got the red line, the 200-day simply moving average at 87.15. So this is what is in store with regards to this chart, provided we stay above yesterday's low at 85.65. That is the last reaction low. Provided we continue to stay above there, we should see some further upside in this currency pair. Now, I mentioned the US dollar, and as you can see here against the Australian dollar, basically it appreciated quite a lot. You can see the Australian dollar falling against the US dollar and hitting a low at 63.65 in mid-August, and that took us back to levels last traded in November of 2022. And from there, we're currently trying to recover ever so slightly as the US dollar is short-term consolidating, and as Australia's monthly CPI this morning hit a 17-month low and came in at 4.9% year-on-year in July, and that compares to a reading of 5.4% with regards to inflation in June of this year. And at the same time, we also had building permits fall more than expected, and they basically declined by 8.1% in July. And despite that, the currency pair hasn't really made much or gained much or made much traction with regards to yesterday's up move. You can see here we haven't managed to rise above the 24th of August high at 64.88, which needs to be taken out for us to form a bottoming formation. If that were to happen, we could then head back up again towards the late June lows between 65.95 and also the orange line here, which is the 55-day simple moving average at 66.36. So these are the upside targets in case of last week's high at 64.88 being exceeded. Now, technically, this view will remain valid provided we stay above the mid-August low at 63.65. Moving on to another currency pair, I'd like to look at the Canadian dollar, because as you can see here, the Canadian dollar is kind of interesting because here we had, as I said, the strong US dollar appreciation taking us all the way up to 136.40 versus the Canadian dollar. And that high was made very close to the high seen back in April and also in May of this year, which last time around basically was followed by pretty steep declines in the currency pair. So perhaps we'll see something similar again this time around, especially now that we've broken through this 1 month uptrend line. But for a toppish pattern to be formed, what I would like to see is also a fall through the 21st of August low at 134.96. Once we fall through there, we should be heading back down again towards the 200-day simply moving average at 134.61 and perhaps go all the way back down again towards the early July high at 133.87, but only in that scenario. Provided that 134.96 holds, it is possible that further upside could be seen. And if we were to manage, but it's a big if, to rise above this 136.40 to 68 resistance area, we could then be heading back up again towards the March high. So at the moment, we are in a short-term uptrend and we're just retracing lower. And we have to see where that retracement stops in order to have a better idea of where the next few days move might be with regards to the US dollar versus the Canadian dollar. The oil price has risen over the last few days, and yesterday did so as US crude oil inventories tumbled by 11.5 million barrels last week, far exceeding expectations of a 2.9 million barrel decline. And if we look at the daily financial bet of WTI, we can see here that we bounced off this support line going back to June of this year, and that we are properly resuming our uptrend with regards to the oil price. And if I zoom into this daily financial bet, you can see here that we are in the process of rising back up again towards the 21st of August high. That is the last reaction high from last week at $81.73. And if we were to manage to break above there, which I expect to happen later on today, and close on a daily chart closing basis above $81.73 today, then we would have the $84.39 high from August as our next upside target, ahead of the $85, $86 mark. So further upside is most likely to be seen if we can take out that $81.73 high with regards to the oil price. And this view remains valid provided we stay short-term at least above yesterday's low at $79.25, and from a medium-term perspective above the low we saw in August so far this year at $77.60. So more upside likely to be seen with regards to the price of crude oil. Moving on to the price of gold, because gold has also had a good run over the last few weeks. We're now trading in 3-week highs. And as you can see here, we have risen above the orange line, the 55-day simply moving average, which I mentioned last week as a possible outside target. And that came in at $1,932 per troy ounce. And that means that we are now on track to head up again towards the $1,950 per troy ounce mark. And further up, we have these mid-July highs at $1,964 as a possible upside target, ahead of the late July high at $1,972. And then obviously longer term, we could perhaps be heading back up again towards the July peak at $1,987. And as you can see here, we're now trading back above the 200-day simply moving average, the red line at $1,914. And provided we stay above there on a daily chart closing basis, and also above the low seen last Friday, our last reaction low at $1,904, further upside for me technically looks to be the most likely scenario with regards to the price of gold. I'd like to finish up on the price of wheat. This was one of our trading the trends when we went short several weeks ago with regards to the price of wheat, and we had a downside target, I believe, of $6.10, which has now been hit. But what is interesting here is that the price of Chicago wheat keeps on declining, and we're now trading in 3 months lows around the $6 mark. And this has happened on the back of weaker Russian domestic and export demand amid a better outlook, I should say, for the country as well as the US's wheat harvest. And the clement weather has led to the price of wheat falling, as there is ample supply of it at the moment in the market. And you can see here below that psychological $6 mark, the next downside target would be the May low at $5.82. And basically this will remain our downside target provided we stay below the 21st of August high at $6.43 on a daily chart closing basis. And you can see here below that we also have the downtrend line here, which currently comes in around $6.15, which might cap any short-term upside bounce together with the low seen in mid-August at $6.13. So probably further downside to be seen with regards to the price of wheat as well. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X, that is to say what we used to call Twitter. And my X handle is @AxelR_IG.